So it forgot the mic. There we go. Wow. I'm telling you, I was just telling you I was apologizing because YouTube was giving me all these weird errors that I don't have internet connection. Of course, I do have internet connection. So then I just started the webinar anyways, pushed through all the error messages, and I'm like, hey, I'm going to start anyways. I think you're going to hear me. Please confirm. And then I realized there's no microphone, and then I re-added the microphone, still no microphone, and then like, dude, YouTube, what's up? Maybe it's Streamlabs, or maybe it's both. I don't know. But anyways, I'm pushing through. I'm pushing through, baby. We're here. So anyways, welcome to Forex.Today. The greatest show on earth for Forex traders. Anyways, this is when we get together as a community of 15,600 foreign exchange traders, and we align our satellites and synchronize our watches. We talk about technicals, fundamentals, trader psychology, macroeconomics. Tell funny jokes? I don't know. Let's go. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term. Never risk money cannot afford to lose. Chicka, 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 Slim Shady. So good morning. What do you want to talk about? I want to talk about Forex. Yeah, again. Yeah, sounds good. So waiting, right? Patience and discipline, patience and discipline. So today, I imagine we're going to cover dollar pairs, yen pairs, gold, oil, Bitcoin, so on and so forth. So whatever you want, we'll cover that. Just make sure you ask. The rules of engagement here is that you're in a professional setting, so please keep your chat professional. If you're a spammer, we're not interested. If you're a scammer, go away. What else? Treat your fellow foreign exchange traders with dignity and respect. I think that's pretty much it. Cool. If you're new, please subscribe. If you're watching the recording, please document under the recording your key takeaways so that you have an archive, a knowledge base of the future. So imagine you can go in the back office of YouTube and search your comments and find out a video from 3 years ago that you watched would be helpful today, right? That's why you want to document by leaving comments under the recording. I mean, honestly. So if we're doing, like last week we did a big thing on relative strength, and if you thought that was helpful to help find the strongest pair or the strongest currency and the weakest currency by essentially creating an index and then matching strong versus weak to maybe have a better trade setup or whatever, quality trade, then you should document that and then be able to pull that up when you need it in the future. So that's why I suggest it. I'd like to take the opportunity to thank Traders Way for sponsoring the Forex.Today YouTube community. Hey, Traders Way is a Forex brokerage firm. You're a Forex trader. You need a broker. They need a trader. It's a symbiotic relationship. So they're trying to lure you to them because, look, you don't know that they have world-class customer service. You don't know that they have awesome spreads. You don't know they have good swaps, right? You don't know their execution speed is fast. So they have to say, well, you know what? The key difference between a moderate trader and a good trader is probably education and knowledge. So I'm here charged with the duty of educating you, sharing the 20 years of experience I have trading the foreign exchange market with the hopes of helping you improve your trading, refine your trading, identify the things you don't know, which is the most important thing, and then showing you the things you might want to know so that you can get your strategies and your tactics together. And then you're like, oh my God, Traders Way has been investing into me up front. So think of it that way. They're investing into your future success now. So when you do find the success, please pay it back, tradersway.com, just out of loyalty. Pay it back. And I think that's a cool way to create business, invest into you up front as a potential customer or client. And then once you find your success and you're ready to, you have the confidence and skills needed to open up a live trading account with real money, you're like, hey man, Trader's Way has been there with me along the way, so I'm going to go with tradersway.com. So tradersway.com, thank you, tradersway.com. Tradersway.com. Let me get my coffee. Okay. Well, one thing I do want to cover. Oh, by the way, look what I found. Look what I found. I had forgotten about it over the years. Yeah, this is my ceramic coaster for my coffee. I'm like, oh, I should be using that because my desk is mahogany. Anyways, cool beans. Okay, I wanted to start today not with Goldie. That's Goldie Pants. We're going to start with the calendar, as they say somewhere. Say something, I'm giving up on you. All right. I swallowed my pride. All right, here we go. We got a big speech today. Zippity doo dah, zippity yay. Very cool. Okay, but notice that there's a lot going on here, right? There's a lot going on here. There's a lot of speeches. What does that tell you? It tells you that Powell believes that people didn't understand what he was talking about. You guys remember the press conference? He's like, this is a really big deal. And they're like, you've never hit your targets before, so like, why should we care? No. This is a big deal, what I just said. What I just said was a big deal. They're like, we don't really get it. So anyway, so now they get together and they're like, dude, Jay, right? JP, we need to go out and tell people how big of a deal this is. So anyways, they're trying to get a message across. It'd be good to try to learn what they're saying. By the way, yeah, there's the microphone. Wow. Okay, good. So you can hear me. They're trying to tell you something. So it'd be a good idea to try to listen. Okay? That's the key takeaway, I think, that they feel like they must communicate. That they're not being heard, their message is not being heard. And now why should we care? Well, they actually manage the value of the dollar. So last week, one of the things we did is we went through some reports on the South African Central Bank, and they actually told us what they expect the value of the South African rand to be next year. They actually told you. That's why you do this stuff. I think it's incredible when the people in charge of the money tell you what the future value is going to be. Now you don't even need to do your work, per se. I mean, that is part of the work. But they're telling you in advance what they think it'll be worth in the future. Now, South Africa didn't give you a number, but they did tell you the direction they expect. Okay? And really, that's what the Fed is trying to tell you now. Again, they're expecting interest rates to not go up for years and years and years. Okay? All right, cool. Now, going on to tomorrow, okay, Powell's testimony, and then New Zealand interest rates. Now, this is the one we've been hearing that they're going to lower interest rates. So we got to keep our eyes on the prize here. The most interesting part is not necessarily the decision, because if they lower it, everyone will say, well, that's what we expected. And if they don't lower it, we're going to still think, well, they might lower it in the future. So we're going to pay attention to the statement. So either way, the statement is more important. You get that? Yeah? You with me, Goose? Yeah, Daniel says they're literally gold. Well, I don't know if they're literally, but they're definitely figuratively gold. And you'll find that very often they simply tell you what's going to happen. Okay? All right. So let's move, let me get back to the calendar. All right. So that's a big one on Tuesday. European PMI, not a big deal. You know, blah, 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 blah. Okay. BOJ meeting minutes. Okay. That's something that you should read. SNB interest rate decision, right? And their assessment. Once again, very important. Now, this will directly impact the value of the Swiss franc, but they'll also tell you about the future outlook for business, for the economy. So, does Switzerland want a strong Swiss franc or a weak Swiss franc? Okay, but why? She says weak, Jeff says weak, Adam says weak. By the way, Adam, did you get your thing last night? The thing I sent you? Morena says weak, Samuel says weak, but why? Yeah, Jeff's got it. No, thank you for your patience. Yeah, they're exporting chocolate, cuckoo clocks, watches, and of course, banking services. So if the Swiss franc gets too expensive, like as the Swiss franc goes up in value, the cost of of a Rolex, let's say, goes up. So if you're British, you have to pay more pounds for a Rolex, even though the pound, right, the pound may not have changed. The Swiss franc has gone up. So it's the same Rolex as a week ago, but now it costs you $800 more. Okay, you see that? Not in terms of Swiss francs, but in terms of pound. Because the pound didn't change, but the cost of getting a Swiss franc has gone up. The Swiss franc is appreciated. So everything in Switzerland gets more expensive. And there was a time a couple of years ago after the Swiss bank debacle, people were skiing in Switzerland, and they woke up and found out the cost of their hotel, the cost of food, the cost of lift tickets, the cost of everything in Switzerland went up like 40% overnight. And let me tell you, Switzerland's never been cheap. Jeff says Swiss knives. Yeah, I guess so. I don't have. I have very fancy French knives, and I have very, very, very fancy Japanese knives. And we must have a Swiss Army knife somewhere. All right. So anyway, so banking services and such. That's really what they export a lot more services than they do products. But it's easy to think about the cost in U.S. dollars of a Rolex going up, right? So So they would rather have a cheaper Swiss franc because they're an exporting economy. Okay, that's what they would rather have. And in particular, think about Switzerland. It's in the center of Western Europe, so they're surrounded by euro, and they want to do a lot of business with euro. So if euro is weak, they definitely don't want a strong Swiss franc, but that's typically what happens. And then the euro, I would expect over the next year, the euro should go up in value, in my opinion. And the same things that make the euro go up in value should also make the Swiss franc fall in value. And that's really what Switzerland wants. Now, the sad thing is Europe doesn't want a strong euro because they have the same problem. They want to sell BMWs and Mercedes, right? And Ferraris and Porsches, right? Maseratis. They want to sell them to America. But if the euro goes up in value, well, the problem is prices are kind of sticky, so it's hard to raise the price of a car if someone expects the car to be 90,000 US dollars and suddenly it's 150,000 US dollars. You're like, dude, that's too much for this car. So what happens is the manufacturers, they eat the loss on the currency exchange, which then lowers their profits, right? So anyways, Europe wants a cheap euro, Switzerland wants a cheap Swiss franc, and that's the battle that we have to contend with. Okay. So anyways, Swiss National Bank, pay attention. Weekly jobless claims on Thursday, obviously. Durable goods orders on Friday, that's really a snoozer. It's really volatile and doesn't really tell you much. It might be a little bit of insight into the real estate market. Okay. But other than that, it's very volatile. And it's changed over the years too. It's kind of funny. It's not what it was 15 years ago when I was young and beautiful. Look at this. Join 11,000 Forex traders. Whoa, 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 whoa. We're at 15.5, 15.6 now. So anyways, thank you very much, everybody, for being a subscriber to the community. Appreciate it. Bum, ba, da, ba, bum. Ba, da, ba, da, 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 da. Cool. Hey, do you want to do Commitment to Traders report, or should we just kind of skip it? I mean, we could at least do the euro. There's no harm there, right? Yeah, we can do some euro. Say something, I'm giving up on you. Sorry, once I get a song in my head, it's nuts. All right, let's take a look. First thing, by the way, this is the COT, Commitment to Traders Report. It's a report gathered by the Commodity Futures Trading Commission, okay, the CFTC. And they look at hedgers, they look at speculators, okay, they look at total trading, okay, and they add this up, and then they look at this number, and they don't add up. So the difference between the total number of contracts traded on an exchange minus the hedgers, minus the speculators, you get a number, and that number is dumb money. Us. Retail scum. Okay? And by the way, I had the head of the National Futures Association look me in the eye in front of hundreds of people and essentially laugh and chuckle as he said, oh, retail Forex traders, they're just dumb money retail scum. We don't care about them. It was amazing. I got up and I walked out of the room. I couldn't believe it. All right. Anyways, let's take a look. So the first thing you want to look at is how many contracts on the euro are there open right now that are long. These are contracts that make money if the euro goes up. What have you noticed since August? End of July, early August. Well, the problem is, Daniel, when you get better, then you become a company, and now you're not retail scum anymore. Another way of saying it, if you don't like the idea of being retail scum, you're a professional trader's liquidity event. Right? Think of all the retail Forex traders that don't have a strategy, don't have a plan, they don't do the research, they don't understand the fundamentals. They walk into the market and they buy, which means someone sold it to them. Usually someone with a plan, someone with a strategy, someone with fundamental expectations, someone that knows this is a terrible place to buy and a great place to sell, so they sell and some dumb retail scum Forex trader buys it from them, right? But hey, that happens all the time, and we actually need that. So you just got to move away from, right, dumb money is the one without a strategy, without the plan, doesn't understand tactics. So you're learning how to do the fundamentals to create a strategy to then, surround with tactical, right, so that you are no longer dumb money. So everyone here started as dumb money. Hey, what's up, fellas? What's the trade? Are we buying today? What's up? Right? That's where we started. But that's not where we finish unless you go bankrupt first. Okay? But I think the more you grasp the idea and you fight against it, the better you're going to be. Right? So anyways, less and less and less and less and less and less professional traders are holding long positions in euro. Now, this is in the United States of America only, on an exchange only, probably out of Chicago. Okay? But it's somewhat indicative of what's happening in general. Okay? So there are less European bulls. So now let's look at bears. La 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 la. La 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 la. Oh my God! Whoa. Look at this, huh? Okay. Wow. So what's happened here? Has a lot changed as far as bears are concerned? Now, while you're pondering that, for those that already know, I want you to ponder something different. We're looking at the value of euro in regards to long contracts open and short contracts open, and looking at the differential between the two. But I want you to also look at the pattern and align this up not with ECB meetings, but with Fed meetings. Okay? Or you could line this up with, let's say, the stock market crash. Right? What happened? Okay? Okay? This is interesting, right? So if you are analyzing this now, you can say, what happens to the euro dollar? So this is February, March, April. what happens to the US dollar, because this is euro in dollars, what happens to the US dollar when the stock market crashes? Or you could say, what happens to euro futures contracts when the US stock market crashes? Because now you can ask yourself, what should I do, or how should I behave the next time there's a significant decline in the US stock market? You see? This is valuable information. This is actually week over week open contracts. This is not a survey. This is not an opinion. This is money leaving the market. Did it, by the way, did it affect long positions? No. Anyways, pay attention. So what we're looking at now is this, and I'll do this in black, okay? This is the difference between the two, okay? Nice. So recently it looks like euro dollar down, but let's try to explain it. Is it more sellers or less buyers? This is knowledge now. Is it more, what, okay, do we have more or less sellers? We have the same. Do we have more or less buyers? We have less buyers. So what does this mean? I want you to think about it. So euro dollar has kind of paused, right? Euro dollar, right? If you look at this other line, oops, no, that's not what I want to do. Oh, I guess I killed it. If you look at this other line, we're looking at the price here, okay? This is the price of euro dollar, okay? So what we're trying to discern is if we've paused here, if we're no longer going up, is it because bears are selling? What's holding euro dollar from going up? Is it sellers? Yes or no? Are bears challenging bulls, holding price down? See, this is something where you're going to move from dumb money to smart money just because you've never even thought about this before, and now you know. You always thought the market coming down was sellers and the market going up was buyers, but right now the market is in a flux, but it has nothing to do with bears. Nothing. Nothing. Isn't that neat? So you have like 1, 2, 3, 4, 5, 6 weeks. And there's virtually absolutely no change in the number of bears. But there's been a lot of change in bulls. Okay? Do. So we have less bulls for 6 weeks and no additional bears. So what do you think will happen in the future? Are bears confident? Are bears in control? Are bears dictating price? Yes or no? So bulls are taking some profit then because they're getting out, and assuming they bought low, now they're selling high. They're putting some money in their pocket. What do they want to do in the future? Are these bulls going to turn into bears? Or are they going to buy it back? Are they going to buy the next dip? What do you think a bull is going to do? See, remember, there are still bulls in the market, but some of the bulls have left the market. Are they going to come back to the market bearish, or are they going to come back to the market bullish? So we don't know the future. We don't know what they're thinking about. We can speculate. We can speculate as dumb money, or we can speculate as smart money. And in this case, we could say, well, we do not see an increase of bearishness in this market, just some profit taking on behalf of the bulls. And if they made money from their trades earlier, they're going to want to do the same thing again. If they were a bull in May and made a ton of money between May and August, they're going to want to be a bull again. They're just waiting for their price. If that's your opinion, then you hold steady and you try to identify using technical analysis the price in which you believe bulls would consider returning to the market. It's either a price or a time issue, but they're likely, because you haven't seen an increase in bearishness, you know they haven't converted from a bull to a bear, so they must be waiting. And it's either a price or a time. And that's now our job. What do you think? Was that helpful? Welcome to the world of smart money. Now you know. Facts, facts, facts. Okay? And right now, we do not have the right market conditions. What's up, Maida? Okay? We do not have the right market conditions. Okay? But you're looking for the right market conditions. So part of your analysis has been successful. Is current market conditions, or are current market conditions, or are the current market conditions the kind of market conditions in which a bull would say, look at this, I'm definitely going to buy because this is what I've been waiting for? Do we have those market conditions now? No. Done. Good job. Okay? So now you can trade the shorter term if you want, or you set up the longer term. So last week, and by the way, it looks like around Tuesday of last week, we had a plan. Up, 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 right, to 10,900, down to 10,400, and then maybe some up. Okay? That's, I think, reasonably accurate, considering we did that on a Tuesday, maybe even earlier than that, because look at this, how steep the down is. It's probably because I didn't have enough chart. So we went up not to 10,900, we went to 11,000. So we went $173 more, which is nothing on Bitcoin. And now here we are, 10,500. I said 10,400. Okay? Cool. So, if this holds, whoever did this trade plan and this trade plan, right, is now on this trade plan. And if that's true, they're targeting here, although, as already indicated at this price, there may be a challenge that we have to overcome first. Okay? Of course, if we go lower than this price, technical analysis says if you're a bull, take a walk, because bears are taking it down here. And we know that because this is the exact price a bear would want to sell. and they're going to have conviction. If they see that as a double top, then the drop will create a lower high, and then, sorry, a higher low. No, is it right? A lower high, lower low. Okay, lower high, lower low. So a bear will be looking for this. Okay. Now, should you be a bull or a bear? I don't know. That's your decision. Okay, but I can tell you, if you are a bear, you want to sell it at 10,700 and some 750 maybe, right? And you're probably going to have a week like this. So if this goes higher, bears, right, you need to be very careful. If we do something like this, if you're a bear, you should be very, very, very careful. Okay. So I don't know if you're a bull or a bear. That has to do with your macroeconomics. So if you think this is a tough start to the week, okay? If you think that's a tough start to the week, well, a bull is looking at this price, $10,556.75.5. So being at this price is not unexpected. Let's think of it this way. All bulls last week, so now we're going back to Friday, Thursday, Wednesday, etc., said that this was the price they wanted to buy. So now you got it. That's what bulls wanted. What they do, we don't know. So now we have to drop into a smaller time frame and see what tactics they deploy, if any. If they don't start buying, then we don't buy and it doesn't affect us. But a bull last week would have been thinking about it. And now check it out. You can consider it a midpoint psych level. You can consider it a roll reversal. You can consider it a pivot. You can consider it whatever you want. If you're a bull, this is a very, very, very strategic price. Bears, on the other hand, are looking at this price, and we also knew that last week. These are very, very obvious prices. I don't know if you're a bull or a bear. I want to be a bull. And I think you know that. You should know that. I want to be a bull. Not that I'm bullish on Bitcoin, but I want to be a bear on US dollar. But if you're a bear, this is your triple top play, and this is your target. Very, very, very simple. So if you are a bear, that's your triple top. That's the exact price, and you should know that. To sell it at 11,000, come on, bro. Seriously? Triple top at 11,000, you're a bear and you didn't sell it? What? I mean, it's perfect. It's a perfect trade there. Okay? So now, a bear also knows they will be challenged at 10,500. Why do we know this? This is just technical analysis. That's why you use technical analysis. So what we don't know is what's going to happen next. Okay? If you start to see evidence of this, that's going to be a straight up threat for bears and an opportunity for bulls. So I do want to see something like that. I have to look at this at a higher time frame and say, this is what I expect. Okay? That's what I expect. Will I get that? I don't know. So that's where your technical analysis comes in. You have to have an opinion. You'll never know without the opinion. Okay? Or, of course, you can just be a shorter term trader and trade the range. Okay? But I'd like to be up here by the end of the period. Okay? By the end of the week, I'd like to be on the way to 12,000. How about you? 11,500 is most likely. So a $1,000 move in Bitcoin this week to the upside is what I want. How many people think something similar? See, if you don't have that in your process, you're going to be very inconsistent in your results because you're not trading consistently. If you're thinking, well, I might be a bear today and a bull tomorrow, and you'll be inconsistent, and I don't think you'll be lucky enough to produce consistent results with an inconsistent strategy, or really no strategy at all, right? But if you know if you're a bull, then now you'll have more consistent results because you're doing something more consistent. And I know your results are going to be more consistent because the only thing you do as a bull is buy dips in an uptrend or sell rallies in a downtrend. It's the only thing you do. You don't know if your results are going to be good, but you know they'll be consistent. Okay? And the best part of that is you know when not to trade. Okay? So for example, if you're a bull, this is likely to be an opportunity, but like a little bit lower, probably not an opportunity. Okay? So if you guys believe we're in this process right now, what's the next step? This is the strategy, by the way. So now we need some tactics, right? Lungster says, I'd like a bigger pullback, but that screws everything up technically, Lungster. Okay? If you get that, it ruins things. Now, if you mean a little bit lower to 10,400 instead of 10,500, I could tolerate that. But we've already hit 10,500 and got a bounce. So I don't know. You got to stick with good technicals. Okay? So what's the next step, guys? I have a strategy here. I have a bullish strategy on the chart. What's my next step? Yeah, zoom in. Tactics. So we know what we want to do. We want to buy dips above 10,500. Okay? And if it goes below that, I'll let it go down to 10,400, bounce there, and come back up above. So either way, we have a kill switch. Okay? So now we can move in. Okay? So the first thing is we can only buy dips in an uptrend. Is this 5-minute chart currently in an uptrend or a downtrend? Down. So we need some up. And we know what up technically means. Okay? And we know, like in a dictionary, you might say the opposite of down. That doesn't tell you anything, right? No, and up means higher highs and higher lows. So the very, 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 very least, you need something like this. Huh? Hoorah! The very least. Or you look at M. M equals what? What does M equal in statistics? Slope. Okay? In statistics, or in this case, it's actually probably some calculus. We know slope is now equal to rise over run. Okay? The run is horizontal axis. The rise is the vertical axis. Okay? Okay, now it's a quadrant if you're doing calculus. It's a quadrant, so we're in the top right quadrant in this case. But we're looking for every move to the right, which is run. Okay? So over time, price rises, right? It's a positive number. So the distance, the price of this candle versus this candle is higher, and then this one higher, right, or a little bit lower, and this one a little higher, and this one a little higher, but we're actually looking at the average, okay? And the average creates a slope. So right, so you look at it this way: this average, and then this average, and then this average, and we're projecting out into the future this way, the average price, which now is technically bullish because for every candle to the right, we get a little green, we get a little higher price. Another candle to the right, a little higher price on average, correct? So that means now on this time frame, even though it's a 5-minute chart, you could say, well, statistically speaking, this 5-minute chart, right, is now bullish, and we were looking at a 4-hour chart earlier, I think, and we were saying, well, based on that, we want to buy dips because we believe the 4 hours in an uptrend, but we're going to buy dips on the 5-minute so that we're incredibly accurate, because that means you're buying as close to that 4-hour support as possible. Buy, right? And you're getting what we deem the proper trend. It's interesting, right? Strategy and tactics. Would you please do me the courtesy of clicking the like button if you appreciated that? Because right now we're here waiting for market conditions to be more favorable before we pull the trigger. Well, Ans is no good at buying it lower than M2. The answer to that is standard operating procedure for swing trading. So the answer is no, unless there's an out of position profit taking counter trend. Okay, so that would be a bearish OOP 4-hour 21 into a profit zone, which you would know creates a counter trend. And if that doesn't make sense to you, then the answer is no, absolutely not. If you do know what that means, you can say yes, but it doesn't make you bullish. It's simply bearish profit taking that might turn the market, but not necessarily. Okay? Yeah. So most of these yen pairs, under those circumstances, still tell you to wait. Now, if you can, right, one of the things I've been talking about the last couple of weeks is that you can try to be short-term short, which, right, and long-term long, which means you're selling on the way down, like on a 15-minute chart or a 1-hour chart, but on the 4-hour and the daily, you're waiting for those bullish conditions that we identified that might be seen inside the Commitment of Traders report. We don't know right now, it's a theory. So you're like, well, if you're going to try to catch the theory, you want to be long-term long, right? Where you want to be a bull, and you want to be a bull for weeks, not days or hours. So you're waiting for the right time and the right price to indicate the proper market conditions. So on the long-term charts, like the 4-hour daily, you're like, market conditions are not favorable for my long positions yet. Market conditions do not indicate that bulls are re-entering. Remember, that's where we start. Your fundamental analysis, in this case, of the Commitment of Traders report may tell you that in the future, on the long run, between now and the end of the year, we will be in a risk-on bullish mode for things like Bitcoin or things like Euro dollar. Okay? That's your long-term fundamental analysis. And then you use your technical analysis to look at the charts and say, well, that might be true, but not now, not yet. So you could walk away and just wait and wait and wait, which is fine, because if you're a big trader with big money, if you're managing, $100 million as a Forex trader, you probably would just wait. But you probably don't have $100 million, right? So now you got to trade because you're trying to build your stack, right? So what do you do now? Well, at least have two different strategies in play. You can say, my fundamentals tell me that by the end of the year, I believe the market will be up. Great. Is this the right time and price for me to start tiptoeing into that portfolio, if you will? And the answer is probably no, yet. So you don't throw it out, you just say, not yet. That's what technical analysis tells you. Is this the right time? Is this the right price? There isn't anything else in technical analysis. It's only price and time. So you're like, well, it's not the right time, it's not the right price, so I wait. So now you can walk away, or you can say, well, I know it's not the long game, but the short game here is I can take advantage of what is obviously currently bearish. Okay? So you sell for today and then analyze again tomorrow. So you can day trade down and swing trade up. That's why I want you to be, I want you to eventually to be an expert on scalping, spot trading, day trading, swing trading, position trading, right? I want you to be an expert in all of this, because all of this will give you more consistent returns and lower your volatility in your trading history. Because in this period, if you are trying to build long-term positions but keep getting knocked out, or just never get the opportunity, well, your shorter-term trading is still earning income because you're selling in something that's obviously bearish. And some of these trades, like Bitcoin, was like exactly the right price. Like, dude, seriously. Okay, so you got that going for you, but that earns income, and income is on the long run another form of poverty, because you get paid for your time. You have to be in front of your charts trading this. Now, I'm not saying it's bad, right? Don't twist what I'm saying. I'm just saying it's hard work. Then, right, if you get better at the other things too, remember, I'm just saying balance. Okay, I'm just saying balance. I'm not saying one is good and one is better, one is bad, one is right, one is wrong. I'm not saying any of that. I'm saying in the long run, 10 years from now, I personally would like you to have balance in your trading, which means you have competency in more than one strategy. Because I love shorter term trading, okay? Now, on the longer run, if you can get your fundamentals correct and you get the skill to align your technicals, then you can enter a trade, move your stop, and now you're done working. And you might be in that trade for days, weeks, and even months. Is it any extra work? No. Is it foolproof? No, because it can go up for 3 or 4 or 5 or 10 weeks and then come down and you can get knocked out at break even. So now you have to get good at sort of risk management and when to move your stop and when to lock in profit, right? And to get those, the long term right, you're going to need to know fundamentals and seasonality. You're like, oh my God, that's complicated. Yeah, I know. Nobody said it was easy. No one said it would be so damn hard, right? So you get that going, and the interesting thing is that's more of like the George Soros play, the more like the institutional play. This is more like the hedge fund play, where you can build a portfolio, and once you put in your stop, right, or once you move your stop to break even, you're done with the trade. You don't think about it anymore. There's no more work. Ideally, you're collecting a yield, so you're earning income that way. But because you got your fundamentals lined up, things like maybe your CFTC, commitment to traders report, or maybe it's something else, that can make you money every day. It's like you own a house, and every day usually it goes up in value. Every single day, my house goes up in value. Every single day, my house works for me. Okay? Every single day, my house works for me, increasing my net worth. Well, your portfolio in your Forex trading can do that too. You got your stop at break even, so you can't lose money. Every day you collect a swap payment, an interest payment, so you're collecting rent from your money. And every day, ideally, if you get your fundamentals right, you get currency appreciation. And every single day, that profit gets put into your trading account and you can trade it. So it's wealth generating, right? A little bit of income, mostly wealth. But then if you go down to 1 hour charts, 15-minute charts, 5-minute charts, that's much more income based. You're probably going to be in the trade for the day and get out at the end of the day. Again, nothing wrong with that. In fact, you want to be able to do that very, very, very well. Because if you're doing both, in the periods of your long-term trades moving sideways or actually coming down, then your day trading can offset some of those losses, and you're paying yourself for today. Okay? And when you combine those, what happens? You're lowering the volatility of your overall returns. Okay? Now, most funds, they only measure closed trades and stuff, but you want to be more sophisticated than that. So imagine now you got 10 trades open, and today they all came down a certain amount, and you had a floating profit and loss that changed from, let's say, 10 trades, you have $10,000 in floating profit. But now today, because of the pullback, now you only got 9,000 in floating profit. I mean, you're still profitable, right? But now you have less profit than yesterday, simply because it's a dip. Now you're not saying this is the end of the, right? You just have less floating profit. But now, if you entered some other trades, and let's say they're completely unrelated. It's not like you're literally hedging, like you got all these yen trades long, so now you're going to have a bunch of yen trades short to hedge. No, you just have today, whatever. You do your relative strength exercise and you're selling pound Aussie today. Great. And you make $400. Well, that's lowered, right? Because now your overall drawdown for the day in floating profit is, $1,000 down on the yen on your long-term trades, but you picked up 400 on your day trading, and now you've lowered it from negative 1,000 to negative 600. And then of course you get your long-term right, and after a day or two of that, then it starts going back up again. And let me tell you, there's nothing better than starting a new trading day where you wake up in the morning, and of course the first thing I do is I grab my cell phone and check the positions, right? You grab your MT4 on your cell phone, you open it up, and you're like, oh, I'm up 800 pips for the day. Nice. I think I'll go shower now, right? And you feel so good. But the same is true on the other side. You wake up in the morning and you're down 1,000 pips for the day, and you're like, son of a, right? So that's why, ideally, if you can get really good at short, medium, and long-term trading, overall, 10 years from now, the performance of your overall trading history will have lower volatility. And that is one, if not the most important thing. I don't see, most people don't know this. Most people think the best thing you can do is have high returns. That is not true. If you're going to raise money from people in the future, if you're going to be a manager of money in the future, the number one thing is volatility. The second thing is still not how high your return is. The second thing is not volatility, but consistency. See, they just want to know, are you going to make me 10% this year? 12%? 8%? 2%? But they want to know for sure. That's what they want. If they looked at you and said, well, over the last 12 years of your trading history, we feel confident that you will produce us 12%. And you're like, 12% a year? Dude, I can do 40. That's not what people are interested in, per se. What they are interested in is the consistency and the low volatility. They don't want to see a 10% drawdown for you to produce an 8% return at the end of the year. They're like, dude, whoa, the pain to gain on that is horrible. There's more pain than there is gain, right? So they don't want that, and that's a form of volatility. So I want you to think of this overall. I want you to have balance and harmony by you becoming a really good trader on multiple time frames in market conditions, and you won't know the market conditions unless you have the longer term point of view, the fundamental side. You won't know if these are short-term short conditions, because how would you know that if you didn't know about the long-term long? If you didn't know about that, then you're just floating around. So, right? You see? So at the 10 years from now, or even 5 years from now, I'd like you to be very, very good at short, medium, and long-term tactics. Okay? And the way to do it is don't try to learn them all today. Break it down into digestible pieces. Okay? Sebastian, you might want to try tradersway.com, the sponsor of our community. So if you just learned something, visit Traders Way right now and open up a demo account. Yeah, there's no financial cost to this webinar. You don't have to pay money today, but it does come with a cost. You are now obligated to visit tradersway.com and open up a demo. All right, check this out. Do you think this is interesting now? Could this be the one? I don't know. So you better make some decisions. Now remember, we kicked off 10,500, and we said, based on our longer term technical analysis, this probably very much could be the price. The price of the week, guys. That's what technical analysis tells us. We might be able to get the up right off this price, and if so, we're on our way to, I think it was 11,500. We're only at 10,600. You could have bought it down here. If you had done your analysis, you would have been way aggressive, but whatever. We've moved up 10% of our projected move. There's still 90% left. So what are you going to do next, son? Well, we know if you're right, there's only two plausible things. It comes down and then bounces up, or it just keeps going up. Okay? If it does anything else, you're not interested. Okay? Did you know less than half of the viewers have clicked the like button? Less than half. 65% of people are not enjoying this webinar. So I must apologize. I mean, if someone doesn't have the strength to move the mouse all the way over to the like button, Grumpy Cat, then you have to click it 3 times, Grumpy Cat. Okay? Anyway, so there's Bitcoin. I don't really care about Bitcoin. That was mostly about US dollar. Okay? Because if that happens, that's going to impact this. Once again, we're at a price on gold that was discussed a week ago. We're in this giant gold range. Now, there is a slope to the downside. So you might want to have this like wedged, if you will, a giant gold wedgie, right? A golden wedgie. Reminds me of high school. Boom, 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 boom. So what's the next play? Well, if you get this, if you hold it above, right now the number is 1,913. If we keep it above there, then current expectations is back to 2,000. It's actually $1,998.62.5. Okay? But that just puts us in the range. And that's what the stats are telling us. That there's no range, or there's no trend, right? Very little trend. And the range is narrowing. So all we're saying is you'd be lucky to go 1 standard deviation. Okay? Anyways, let's just keep it there. Maybe this. Okay? But that's already October. If you're doing gold, this is XAU, we're already thinking October. What's the date today? The 21st? Okay, there's 9 days left. We're already thinking 9 days ahead. Okay? Okay? If that doesn't work, the next price is closer to 1850. And that's what bears are looking at right now. Okay? So, you're either a bull or a bear. I don't know which one you want to be. Can't be both. If you're not a bull, or if you're not a bear, what are you? What happened to this pig? Huh? What happened to this pig? Yeah, you got slaughtered. So if you don't know if you're a bull or a bear, then you are about to lose money. Okay? If you're not a bull, if you're not a bear, you're a loser. Don't talk to me that way, Wayne. Right? Put that into your wheatgrass. Yeah. Yeah, I should put my graduation cap on him. So, anyways, so if I want Bitcoin to go up, I want this to go up. Okay? Cool. If I want Bitcoin to go up, I want oil to go up. Okay? So, what does this chart say? This chart says somewhere between 40 and 39, oil will go up. Now, as you probably know, consumption of oils per day is 91.7 million barrels. Isn't that right? How many people know that as a fact? 91.7 million barrels per day. And how do you know that with such accuracy? How could you just casually slip that into conversation? Oh, speaking about basketball finals, did you know 91.7 million barrels a day are consumed? Yeah, from Off the Charts. How many people attended Off the Charts with Wayne McDonald last night? Now, by the way, we're going to try one more time using Google Meet, and I think I figured out why it didn't work, even though I bought software to upgrade it. And if that doesn't work, then I'm going to go back to Zoom. Wait, I need, KG says I need, like, politically correctness? Oh, Guy saw it this morning. Yeah. We learned that from the IEA. I only mentioned it. What's the other thing? Is consumption, or let's say demand, is demand for oil going up or is it going down? Yeah, Jim's right on it. Down by 200,000 barrels a day. So, I'm in a sticky situation here. I want to buy oil at 40, but I got to hesitate because there's demand loss right now, not a demand increase. But maybe $40 is the price. We are looking backwards, right? Maybe demand at the old price is down, but maybe demand at the new price is going to be up. So maybe at $45 we've lost some, but maybe at 40 bucks. Like, look at this, guys. It was down at 36. So there are only two types of oil traders in the world, right? Ones that believe this, we're on our way to 30, or ones that believe this, we're on our way back to 50. I still think back to 50, but, and that's a big but I need to be careful because what I want and what is could be significantly different. And I look at this where, why would WTI go up if demand for WTI is falling? So if I was a bear on this, I would have the focus and the strength to take this down. But I'm looking at this as a 4-hour 21 OOP. So what I want to see happen and what I think is going to happen as a bull, we're going to hit 44 between now and Wednesday. I don't know why, It's just what the chart tells me. I can look at it and say, really? I don't know why she swallowed a fly. Actually, I'm gonna change the number here. I'm gonna put it to the conservative target. Hang on, I have to add that. I'm gonna adjust it. It's not 44. It's 43 and a half. Okay. Which tells me we're entering a giant range, 35 to 45 range. So you either buy low or you sell high. Okay. Right now, the other thing you could do is, instead of doing it that way, you can just say, well, it's slightly down. Let's add some more time. I don't know how far back you want to go. At some point, you're messing with stats. That's the interesting thing. You can get any slope you want by adjusting the stats, right? Look, Hillary's winning, Hillary's winning, Hillary's winning. Oh, Trump won. So you can say, since the June meeting, the June Fed meeting right here, it's basically sideways, slightly tiny up. But if you go to, I don't know, when? I don't know, measure your time. So what I'm pointing at is the only thing we have here of relevance is the psychological level. Statistically, we're at the average, which means it's really not a great place to buy or sell. Right? So the other parts that I'm adding to this is A, we broke through the average. B, we opened above the buy zone. C, we're at the 4-hour 21. And all of that tells me that often, not always, but often in market conditions like that, we hit our conservative target, so let's say 43 and a half, and we do it early in the week. That's why I said Wednesday. Now, it doesn't have to happen that way, of course. But going back over 1,000, maybe 10,000 situations like this, it's often true. Certainly not always. Okay. I don't think we're going to get to 50 yet, but the idea is at least back up to the top of the range. Remember, when I'm in a range, the way I trade it is I expect the range to hold forever. We will never get above $45. We will never go below $35, ever. We are going to be in this range for 100 years. You will not live to see the breakout. But if it does break out, it's meaningful. Okay? That's my point. You should expect it to never, ever, 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 ever break. Ever. But if it does, it will be very important, technically. How do you manage the breakout? It's the easiest thing in the world. If it breaks low, wait for the pullback, sell the retracement. If it breaks up, wait for the pullback, buy the retracement. Okay? It's actually in my book. I wrote a whole to-do on it 12 years ago. So what do you mean? If you bought up the bottom and it breaks to the upside? Oh, will you take a loss? That's why stop losses were invented. You'll lose money. But the cool thing is you don't lose a lot of money because of your risk management. Yeah, if you buy it here and it drops, you get stopped up. Okay? You shouldn't have a problem with that. So you lose, you stop on the break? Yeah. Yeah, if you buy it here and it makes a lower low, yeah, you get out. You lost money. Just don't lose a lot of money. Okay? See, the secret to success, guys, is not limiting your losses. Only an amateur is afraid of losing money. A professional is not afraid of losing money. Losing money is part of the game. So what is the secret? What's the secret sauce? Your winners must be bigger than your losers. So the other mistake an amateur does is they don't let their winners run. Their winners are not worth very much. Okay? So now they can't afford to take a loss and they lose a lot, so now it gets really complicated really fast. Okay? If your average loser is 33 and your average winner is 99, you can lose, right? You can have 66% of your trades, 66% losses. And when you do the math, you'll find out you lose 0. The most important thing you can do is learn how to let your winners run. And that's why eventually you will need to learn patience, discipline, some level of fundamentals, or at least longer term technical analysis so that you can identify the longer term trade. But your trades need to be worth more. Your trades need to be worth more. So having more small winners is not the secret to success. Having a 90% success rate is not a goal that you should have. You should have no fear to enter good trades. Because you know on the long run, you'll make money. Now, think of it this way. Once you improve, right, your stops are reasonably small, your winners are reasonably decent, and once you get to 50% losers, let's look at it half empty, right? 50% of your losses are losers, but you make money. Okay, whatever. You make money and half your trades suck. The other half are worth something. Now I know over time you could probably get it so that 33% of your trades are losers and 66% are winners, and you know at that point you're making a ton of pips. Okay? So if you buy good, so you have a long-term plan and you believe this is what's going on, and you bought it here, and then it did this, yeah, you're out. You're out. You lost a little bit, so what? Cry me a river. Okay? So now you might start, well, Wayne, you know, I never make 99 pips. Well, your stops are probably too small. You don't have enough long-term vision for what you're doing. So what I suggest you do immediately is lower your lot size, increase your stop, and because you've increased your stop, your targets must be farther away. And at the end of all of this, your risk will be the same. So cut your lot size in half, double your stop, and then based on your stop, triple the target. And you say, wow, this is getting interesting, but it's hard to do it on a 5-minute chart. So now you got to look at a 4-hour chart. Where's the longer term support and where are we going in the long run? And when you line all of that up, you'll see that your consistency will improve and most likely your profitability as well. The math has to work, ladies and gentlemen. Okay? The math has to work. If you have to have 80% winners to make money, your math sucks. Your strategy is flawed. You're delusional. So think about what would work then. What would work? How does the math work out? Well, your winners need to be significantly better than your losers. Okay? And if so, the percentage win rate is less important. Hey, if you're 50-50, you're doing pretty good. If you're doing better than 50-50, you're doing really good. Can you achieve 60% winners and 40% losers? I bet you can. Not if your stop is 12 pips away. So work on the math. What kind of math would work? If you had a 100 pip stop and a 300 pip limit, could you do it? Only if there's a trend. Can you do it? Will a 100 pip stop help you if you're buying yen pairs on the way down? No. You're buying in a downtrend. That's like the dumbest thing ever. That's a flawed strategy. Well, what if the trend is up and you're buying yen pairs and you're buying dips? Is 100 pips enough for buying yen pairs on buying dips in an uptrend on yen pairs? Is that enough? Yeah. Oh, for sure. More than enough, probably. But right now, we got to work on your risk management, and we want to improve your win rate. So now, if you're buying dips in an uptrend, and you're not going to get unlucky and accidentally stopped out because Trump sent a tweet or Lagarde said something at a meeting, or there's one bad day and you get knocked out. What do you mean one bad day? Your trade should be good enough that you're in for weeks. One bad day should be meaningless to you. So now you got to start, right, with a small lot size, have a much bigger stop, and let's see if you can be successful. And if you are truly trading with a trend, that should be way more than enough. And if you're in a trend, the pips are reasonable. Maybe you don't get to 300. Maybe you start hitting 222. Hey, right? That's more than a 2-to-1. Okay? It's a big improvement to what you were doing. And then what you'll find out over doing that for 6 months to a year, of doing that properly, then you can say, well, I wonder if I don't, based on your actual analysis, you probably don't need a 100 pip stop. What if it was 50%? Okay? And now you're thinking, now you can do 50 150s, but you can also do 50 300 OCOs. And you can adjust your limits based on market conditions, and that's where pivot points are helpful because they're predictive indicators. So now you can say, well, I'm going to take a 75 pip stop. It looks like this is worth, 217 pips. Why? That's what the pivot points say. And is that enough? Yeah, that's enough. Yeah, that's more than enough. And now your numbers are going to improve, and you'll probably do better than 50-50. But even if you only do 50-50, you'll be very, very profitable. And that's why I say to like Olin, what happens if you get knocked out here? Oh, market conditions were not favorable to your strategy and you took a loss. And you're like, huh. See, it's not a big deal if your winners are worth something. That's why you have to learn how to have a good strategy for the market conditions so that your trades are worth something. They have to have valuable. Your trading has to be valuable so that your losses are like, gets paid for by your decent wins. But a lot of amateurs do the opposite, where they have like a very small stop because they think if they only risk 20 pips, then it's not a lot of money. But the thing is, you can get unlucky. The wider the stop, the less luck is involved. And you don't want to have luck involved. You don't want to say, well, I did the right thing, but at the wrong time. Okay? And then, of course, if you're only risking 12, you're probably thrilled to get 25. And you're like, oh, dude, come on. Even your winners are worthless. Right? So I just want you to think about it. At the end of 10 years from now, at the end of 2020, right? When we get to 2030, I want you to be good at the short, medium, and long term. I want you to have balance and harmony in your trading. I want your numbers to work out. So if you're not there yet, at least I want you to know that that's where you need to be going. Do the math. Find for yourself what works. If you're doing 25 OCOs, okay? Your losers are negative 25, your winners are positive 25, and you're 50-50 trader, you're not making any money. So how do you make money in that scenario? You have to have 80 or 90% winners, and that ain't going to happen. Sorry, it ain't going to happen. You're not going to be that good. And you'll never be able to afford a loss. So what will happen is, because you're so desperate to have 80 and 90% winners, you'll walk away from decent trades, and you'll panic on when you are losing. Like, think about it. In my book, I say, take pride in your losses, because you should never be afraid to take a loss. If you're trying to hit a 90% win rate, you can't afford to take a loss, so you won't take a loss. And that is the most dangerous formula for disaster. You can't afford to take a loss. So instead of taking the loss, you'll ride it out, and you'll find yourself in bankruptcy, living under a bridge, shooting up heroin to forget about all the bad days. And let's don't even talk about how you raise the money for the heroin. Don't want to live under a bridge, I'm telling you. This is a sport for kings. So make sure the math works out. That's all I'm saying. A little extreme on the example, huh? My kids were talking about like some kid in their elementary school that was vaping in the bathroom, right? Vaping in the boys' room, vaping in the boys' room. Like, that's the whole new thing. I'm like, you never, ever vape. So the next thing that it inevitably leads to is heroin. You're going to be a drug addict if you vape. And my kids are like, oh, vaping's a gateway drug? I'm like, that's right. That's right. It will ruin your life. So, yeah. So I'm extreme even with my family and my friends. And you are family and friends. So, cool. So, thank you, everyone, for being here. Thank you for being part of the Forex.Today YouTube community. There's also a Forex.Today Facebook community and all that kind of stuff. So maybe I'll see you around there. I don't think I streamed it there today. I'd like to thank you for your participation and the professionalism and the focus that you put into this every single day. And, of course, thank you to TradersWay.com for sponsoring our community. I love you. I want you to succeed. This was real. Got to jump, babe.